There will come a time where I will take some of my gold and convert it into income producing real estate and other assets. And that's got to be your foundation, because that's what enables you to maintain what you have and expand what you have.
It's time to diversify your portfolio by adding commodities. Commodities are a separate asset class. Investing in commodities like gold provides a safer edge during economic uncertainties and protects against inflation. Also, commodities offer good opportunities when the stock market goes down. There's usually an opposite correlation to some degree between commodities and the stock market. In the recent past, we've seen some good moves in the commodity market. It even outperformed the stock market at a time when there was huge price movement in bullion and energy commodities. Returns on these commodities over the last year have been quite good, with prices high for some of them. In today's video, we'll tell you what Lynette Zang has to say on how gold and silver would help us to make generational wealth. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. Central banks, with all the money printing they did, created bubbles in all targeted asset classes. After 2008, they actually said they were going to target stocks, bonds, and real estate for stimulus. Such a shock that we have the most expensive housing bubble, at least in nominal terms, the most expensive in history. And with interest rates rising, these markets are beginning to show warning signs. After all, the global central bank's rate hike burst the housing bubble, raising the risks that a recessionary shock could hit the economy. Real estate accounts for about 30% of the world economy. It's huge. It's also very unaffordable for many at the moment. But the threat to the global economy already struggling with runaway inflation, stock market turmoil as well, because they were seriously overvalued and who cared about earnings. And an exhausting war faces another threat: the unraveling of a massive housing boom created by central banks. Home sellers are lowering prices. In the sudden stop to the pandemic boom, rapidly rising mortgage rates are cooling demand, rattling markets from coast to coast. Now, not all markets are seeing it yet, but we think all markets will be experiencing this soon. If we're looking at interest in real estate, now it's somewhere near 6%. Yet a flipper tries to get out of a contract to buy a property. The investor had 40 properties for sale and no one was looking at them because he was looking at what his monthly nut would be. And also, if they have something they need to sell to get into something else. This market is changing very quickly. It's a rapid change and has led people to fear that the situation will get worse. In Japan, for example, in the early 1990s, the residential real estate sector fell by 85%. Advertising fell 95%. We're definitely going to see real estate prices drop by 85%. There will come a time when we will take some of our gold and turn it into income-producing real estate and other assets so that we may never outlive our retirement. And some of what is really important is not just gold and silver. It has to be our foundation, because it's what allows us to keep what we have and expand what we have. Gold and silver are two popular investments for those looking for assets that can be both a store of value and a hedge against inflation. These precious metals are well regarded and have a long history, but they offer different types of benefits and security, and investors should be aware of how they are likely to perform in various economic climates before deciding to invest in one of them. Investors thinking of investing in gold or silver should carefully consider whether it really makes sense for them. This may make sense in the short term or when there are specific imbalances in the respective precious metals markets. That's all for today. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.